Tax for Actors is a boutique accountancy practice supporting individuals and small businesses within the performing arts. Founded in 2011 by our guest Owen Woodgate, TFA work with clients at every stage of their career, offering a straightforward, jargon-free service. They have also recently released an app for their clients. Hello, Owen. How are you doing today?
I'm very well, Matt. How are you?
Yeah, I'm not bad. Really been wanting to do this episode for a while now. I think that taxes fit under the essentials bracket more than nearly anything else. So this was one we really wanted to do. So thank you so much for giving us your time and knowledge this morning. And hopefully we can put some people's minds at ease, or maybe teach them some new tips and tricks in regards to their taxes this morning.
Let's hope so.
Brilliant. And I'll just preface this entire podcast by saying I am in absolutely no way, shape or form a financial expert. I am a complete Luddite. I am so uneducated on this topic myself. I have managed to bumble my way harmlessly through a couple of self-assessments, and that's about where I'm at. So if you're thinking, Matt, why are you asking such stupid questions? It's because I am in this area very stupid, but I think that will probably help. It gives us a bit of a wide spectrum of conversation. So just put that sort of terms and conditions out there, and we'll crack on. I'd love to ask you what motivated you to set up Tax for Actors.
I mean, Matt, I've talked about this quite a lot with various people, but for those who don't know, I was an actor. I went to Mount View back in the 2000s. And I worked in musical theatre, and I did 5, 6, 7 years in the industry, and was, let's say, moderately successful. You know, I worked and I had enough jobs to say that I did all right. But I didn't reach the heady heights of my career that I guess I'd hoped to. So I guess I was always looking at other ideas for businesses or ways to make money or to, I don't know, have a more stable existence. So that was always in the back of my mind. But to be fair, Tax for Actors really did start by accident. I was helping a few friends with their self-assessment. Before I went to Mount View, I was into economics. I was going to go to university and study economics. So I had a kind of passion for money and finance anyway, and I just kind of understood it. And I was a bit of a tax geek, so I just ended up helping a few friends. Pop around their house on a Sunday, have a couple of beers, do our tax return.
What a party! What a party!
I know. I mean, it was absolute rock and roll. Obviously, the tax return took a lot longer than anticipated. The more beers were drunk.
Of course.
But yeah, and that was like a couple of years of me just doing that for friends. And then, that group of friends expanded, and then friends of friends were approaching me and saying, "You've helped blah, blah, blah. Any chance you can help me this year?" And the numbers just kept on growing. And after a while I thought, okay, it's taken up quite a lot of my time now. I should really maybe start charging for this service. And at the time, whilst I had quite a wide range of knowledge, I didn't have any qualifications or training behind me. So I really didn't feel like I could charge a lot. So I think I charged like 25 quid for the first year. And then the second year, maybe it was like £50, and that it literally grew. And I use a drama school word, it grew organically.
Nice.
Just word of mouth, people just telling each other. And after a while, the client list was sufficient enough that I thought, oh, this really is a side hustle. Like, I really should put some time and effort into this. So I went back to college and sort of went through my accountancy training part-time, did a bit of in-college learning, did a bit of home learning. And then it just grew from there. Matt, I wish I could tell you like how we got to where we are now. Like, it's our 10th anniversary this year.
Oh, fantastic. Congratulations.
We've got, 4 employees plus me. And yeah, we're in a really great place this year. So I always sort of count myself very lucky Like
Yeah.
we did work hard, and we've put in a lot of effort, and we do try to help our clients, but like there was no motivation to create this business. It started by accident, and it just got to a point where I needed to take it seriously, because
Yeah.
it needed me to. It grew so much that it became its own entity.
Absolutely. Well, as you say there, you said it was a bit of luck along the way, but I think with stuff like that, you very much put yourself in the circumstances where the luck occurs. Like you had that knowledge, you had that motivation, you saw the gap, and you took it, which is fabulous. I think that type of hustle in the industry and just on the periphery of the industry is essential for anyone that wants to, as you say, find a stable way of maintaining their income. And you said there. That you had a bit of economics training and that you went back and you did your accountancy training. Are there any sort of resources that you could recommend to people that just want to get a decent basic knowledge of taxes, self-assessment, that type of thing? Or is it just a very much case of, Google a book, read a book, get on with it?
Yeah, I think obviously I saw some of these questions in advance, and I've really
Mm.
tried to like think about this. My initial learning um, came from experiential learning. Is that a word?
We're going
I
for it.
learned through experience.
Totally.
So my career, I was very lucky that my career gave me the opportunity to experience lots of different ways of working. So, I had a PAYE job. I worked in a foreign country where there was foreign withholding tax. I worked in the West End. I worked on tour. I learned about being an itinerant worker. I was given the opportunity to delve into tax matters that related to me personally. And I think if you're delving into something that has a direct impact on you, you delve a bit deeper, and the learning becomes more solidified. Um, so a lot of the information that I garnered before my training was all on the HMRC website. It can be a bit confusing, and a lot of people are put off by .gov.uk because there is so much info. But if you just want the basics, or you need to find answers to specific questions, it can be found on the HMRC website. You just need to know kind of where to look and what to look for.
Mm.
Um, so that information is there. Obviously, if you want to take it further, I would suggest going down the AAT route, the Association of Accounting Technicians. Their level 2 course is a really good basics of accounting. It sort of teaches you about double entry, which is kind of the bedrock of accounting. Now, it's not, I have to say, through my experience, it doesn't necessarily relate directly to an actor's self assessment. So it's not really something you need to improve your own ability to fill out your tax return. But if you have, I don't know, some desire to know more about how accounts work, it is a really good course. You can do it at home, you can do distance learning, you can go into many colleges and do it part time. I think it took me about 6 months to complete the level 2, and that was 2 afternoons a week at a college.
Mm.
So that's a good place to start. The resources, really, if you're talking about actors and wanting to do your own self-assessment, it's all online. And I guess a small plug for my wonderful friends Joe and James at Sans Drama. Um,
Mm.
Jo is an actress, and her partner James is an ex-accountant. They produce a lot of free resources on their Instagram and online on their website that kind of dispel some of the myths and answer quite a lot of questions. So if you've got a question, head to sansdrama.com. They've got a lot of free, really relatable information there for sure.
Fantastic. And as you said with the HMRC website, it's quite remarkable how much quicker they they pick up the phone when you're asking them questions about how to pay your tax rather than with problems about yourself. It's like, oh, I want to learn how to pay my tax. They're like, great, we'll tell you exactly how to do that. And as you say, there's so many free resources out there online. And in terms of education in regards to taxes, it's something that adults always talk about, oh, I wish I learned about taxes in school and all this type of thing. Do you think that is the case with drama schools and taxes for creatives, self-assessments for creatives, that drama schools don't do enough in terms of educating their performers, and how could they improve?
Um, I talk at quite a few drama schools, and I go in and
Mm,
do a self-assessment talk and a tax talk. Um, it's difficult because I really applaud the colleges that bring me in and bring other accountants in,
of course.
because I think it's such an integral part of your training. But unfortunately, I do still feel that it's an afterthought. It's a box ticking exercise. It's like, right, well, they're going to have to learn about taxes. Let's bring someone in, tick a box. And I appreciate, like, I truly understand the industry slash college model. These are colleges are businesses, whether they're a non-profit or a charity or not. They are a business. They're trying to make money, and they make money by attracting the best talent to their college. And those graduates then get into West End shows that can advertise the success of the college, and it's this big kind of circle. The problem is there's nothing sexy about taxes. Bringing Drew McConey in for a 3-hour workshop is something that the college can advertise to the hilt and say, look at these incredible people we bring in for our students. There's nothing sellable about saying, hey, we brought in Owen Woodgate from Tax Fractors to give our students a really thorough understanding of self-assessment and self-employed work. It's not part of the process. And I
Mm,
think it's not their fault. I get it. It's just frustrating. And actually, is the problem the drama schools? No, it's more a societal issue than just about drama schools. You know, when were we ever taught in school about interest rates
yeah.
or how a loan works, how a mortgage works? What is a credit card?
Inflation and
How
all that type
is
of thing.
how is paying the minimum payment every month on your credit card going to affect the length of time it takes you to clear the balance? Um, these are things are base. This is basic financial information, and without getting too kind of up the revolution about it, because it's easy to do that at the moment. Who benefits from financial ignorance in this
Yeah.
country? Well, and you can answer that question yourself. I'm not going to say that, but certainly there are certain people within our society, either nationally or internationally, that benefit from the nation or the world as a whole having a poor understanding of finances and
Mm,
tax. Um, and there is no incentive for that to change. Um, I have small kids, they're 4 years old, 5 years old, and they're at primary school. Um, and their curriculum is prescribed in a particular way. Um, do I agree with the curriculum? No, I don't, because one of my kids was learning about Isambard Kingdom Brunel the other day, and she's 5 years old. I'm like, I mean, what the my 5 year old's learning about a architect and engineer who built bridges and tunnels.
mm,
I feel like if she was taught about the value of money and kind of that the relationship of money at that young age, by the time she was 18, her understanding of the world and finance would be so much higher. Even if she didn't want to go into it, she would understand the basics. I just don't think it's part of the curriculum from a young age. And I think it leads to people having a poor relationship with money. Um,
mm.
so
Yeah.
I'll circle back. At drama school, yes, they could do more to help their actors learn about self-assessment and tax. But these, these students are coming from a place of complete ignorance most of the time, and that's no criticism. That's they're starting college at 19, and no one has given them a basic knowledge of money and its kind of its role in society. So trying to teach about self-assessment, it often falls on deaf ears, because unless you have a passion for it, like I did, why would you engage with that? You have
Yeah.
no first-hand experience of the tax system. So this is a new concept, and 2 hours on a Wednesday afternoon after industry jazz, you know, it's just not going to sink in. It really has to be through the course. It would be much better if they had the information drip fed, a
Yeah.
bit more industry preparation. There could be an industry
Mm.
preparation class once a week,
Yeah.
every week for all the 3 years at drama school, and the kind of tax and business side of it could be drip fed through the year. And I think the information would be held in people's brains a bit better.
I
Sorry,
totally
literally
agree
just got
with
on my
you.
soapbox and ranted, and
No,
I'm going to
it's
stop
good.
myself there.
That's what we're here for, and it's all valuable stuff. I agree with you. I think Andrew Craig has got a fantastic book called How to Own the World, which is about exactly what you said: getting a grip of your own, having the ability to get a grip of your own finances in this world. And there was a really pithy quote from someone, I can't remember exactly how it goes or who said it, but it's something along the lines of, if the rich told everyone how they got rich, the rich wouldn't exist anymore, or something like that, or everyone would be rich, as it were. So there's no reason for the people at the very top to educate those below them on how to get to where they are. It doesn't serve them anything.
You're absolutely right, and I want to qualify that comment by saying that I was one of those people, despite my upbringing being fairly, well, let's say lower middle class. Like, I'd come from a very comfortable family financially,
Mm.
uh, as many of us are, because we need our parents' help to put us through drama school. Even then, I managed to get myself in serious credit card debt during my gap year.
Mm.
I owed thousands on my credit card because I did not have a decent understanding of how it worked and what the impact would be. And even now, in my mid to late 30s, I would say that my decisions back when I was 18, 19 on those credit cards are still very much kind of built into my financial position now. I don't think I ever fully recovered financially from that. And
Mm.
it's 20 years on. I'm still paying the cost of making poor choices then, because I didn't have the education.
Yeah.
And I come from a dad who was a financial advisor for a while. So it's my comments about this are not criticism of anybody's position, because I absolutely was in that position myself. And I sympathise and I empathise with where we're
Mm.
at right now with regards to money.
I think also, in regards to, as we were talking about, it's not just the drama schools that could do better, and the fact that they want the more glitz and glam side of the business. But I think as actors at drama schools, certainly myself, and I know it'll be the case for other people, is you are told on a weekly basis that when you go out into the industry, about 3% of you are going to get lucky. For the rest of you, it's probably going to suck for a long, long time, and you're going
Yeah,
to have to really graft and struggle, and you're not going to get auditions, you're not going to get castings, you're going to have money troubles, you should be doing this. And all of you, at least pretty much everyone I know, you're in that bubble of, nah, I'll be in the 3%, I'll be in the West End in a year, I won't need to worry about this, blah, 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 blah. And it is that naivety that I think so many people, it creeps up on them. And if you had the hindsight now, where I go, oh damn it, I probably should have, because I had exactly the same, the couple of hours tax talk, and the guy was incredibly thorough and specific, and no one wanted to listen. And that is absolutely a decision made by us actors in that room at that time. That was not by no means the financial advisor there's fault whatsoever. Which led to, obviously, a lot of us, I presume, definitely myself, making mistakes in my first self-assessment. And I'd love to ask you, what common mistakes do people usually make in their first self-assessment? What ones should they try and avoid?
Okay, mistakes. Expenses is always the one that, rears its ugly head. You have to understand the kind of like the definition of a business expense. When is an expense and when is it not? And that kind of level of understanding isn't generally there when you first start out. Just to qualify that a bit, a business expense is if the item of expenditure, let's say you buy something, is it wholly and exclusively for business? And is the usage of it just for your business, or do you get personal use out of it as well? And that is one of the questions that you have to ask yourself. The other question, which I talk about in my tax talks, is knowing that question should be asked when you talk about the benefit of the expense, not the motivation behind the expense. So I might go out and buy, let's say, I buy a brand new suit. My motivation for buying the suit is I'm going to wear it for my next Jersey Boys audition. But that's the motivation. The actual benefit, whilst my audition will benefit, I benefit personally. One, because I'm choosing to use that suit to go and attend my friend's wedding, but also because a suit gives you, the person, it protects your modesty. It gives you warmth. We as a society say that we should wear clothes when we go out in public. You get a personal benefit. And that's where the confusion happens, is that people might say, well, I bought it for business, therefore it's a business expense. But you do have to delve a bit deeper when trying to determine if something is business or not. And I could go through every single expense and tell you exactly, my guidance, but we'd be here until May the 1st if I did that. But that's one of the biggest mistakes is understanding what makes a business expense. And you can absolutely go on HMRC website and find more definitions and more examples about how to make those distinctions. Yeah. My other thing, which is PAYE jobs, is a big mistake. You might have come out of college, gone into the West End, done 3 months, come out, 6 months later you've gone on a UK tour, but in the middle, in that down period, you worked, front of house at the Adelphi. A lot of people do their tax return and they only file their self-employed earnings thinking that the PAYE job is taken care of. But actually, your self-assessment is an assessment of your yearly earnings in their entirety, and actually internationally. It's your worldwide income in its entirety. So you are obliged to, as well as declaring your self-employed work, you have to declare any PAYE jobs you had as well. And then your tax calculation at the end takes all of your income into consideration.
Yeah, that's how I got absolutely shafted this year.
Yeah.
And I was like, oh yeah, I was like, oh, I might be under this. Nope, no, I'm definitely not.
And that is a really good thing to bring up, is that often your PAYE job they'll be taxing you a certain way. Basically, they're taxing you based on your personal allowance. So we can all earn £12,500 tax-free. And when you have a PAYE job, they make an assumption that that's your only job. So if you're earning £1,000 a month, you fall under the threshold, so they don't take any tax. But they are usually unaware that you have self-employment on the side.
Yeah.
So you kind of get really stung. So I can see how it happens. And it definitely happens to a lot of my clients, for sure. Adding PAYE and self-assessment together, often the tax bill is a lot higher than you expect it to be.
Totally. I'd love to go back to expenses for a couple of questions because I think, as you say, it's such a huge topic, especially for self-assessments. And I like the way you were asking those questions. Okay, what's the benefit? What's this? Because at the end of the day, a lot of people think, well, I can whack this on expenses because I'm a small fry self-employed person. There's no way the tax man's going to notice me. There's no way I'm going to get that email or that knock on the door. But you never, ever, ever know. And if you did get the knock on the door from the angry tax man in the black suit, I don't know. I've got this idea of sort of Tommy Lee Jones from Men in Black kind of vibe.
Nice.
But those are exactly the questions you will get asked. So if you don't have the answers ready when you put it on your tax return, in the off chance that you get noticed trying to, take a cheeky couple of percent off things that, as you say, you wore for your mate's wedding, not for Jersey Boys, because that call didn't come along.
Yeah.
Sound a bit pessimistic, but it happens, right? And you will get screwed. So I'd love to talk about, you've sort of said what qualifies as an expense. And obviously if you got asked questions, you'd get asked for, keeping track of your expenses and proof of your expenses. Are there better ways to keep track of your expenses than being a sort of traditionalist and a Luddite and keeping massive wads of receipts, train tickets and the like? And how important is it, obviously, to keep track of these?
Okay, so you raise a really good point. The self-assessment process is based on trust. HMRC trust you as the business owner to send accurate information. And at the end of the day, that process works pretty well in this country. And there is, stories of, plumbers who don't declare any of their work, and, they're siphoning it all off, taking cash in hand. I think those days are kind of fairly a long way behind us. Because remember, if you don't declare all this income, when you come to buy a car or get a loan or apply for a mortgage, you're going to fall foul. So I think in general, in this day and age of how money operates and backs transfers, most people attempt to file their self-assessment honestly, to the most part. Um, However, HMRC do carry out investigations every year. And part of that is they have algorithms within their system that pick out tax returns that look a little bit dodgy. Let's say the numbers on the tax return just don't quite fit within the accepted guidelines. The expenses are a bit too high, or there's been a significant drop in income after 3 or 4 years of brilliant income. And those algorithms will pull out a selection of tax returns that kind of fall outside the guidelines. And it's at that point that they'll come and contact you. Now, what might happen, and has happened to my wife actually, was they send a very nice letter and say, we've had a look. We think, these numbers aren't quite adding up. Can you just go in and make some amendments if you need to? Would you just go in and just have a double check? Now, we were lucky enough that it was correct, and we went in and we said, no, these figures are fine. And the next step was myself, on behalf of my wife, had to go to an HMRC centre with her business records. And I had to sit there with an inspector and show them that myself and my wife were keeping adequate business records. We had a spreadsheet, we had all her expenses laid out, we had a folder with all her physical receipts, we had her bank statements nicely highlighted. And you know what? The meeting took 45 minutes and they were like, brilliant, your records are in perfect order. Thank you very much. See you later.
Brilliant.
What happens if you turn up and you are one of those people that has tried to intentionally defraud the system? Well, it's at that point where they're going to look through your business records and you can't justify certain expenses, or you've put through £1,000 for clothing and they'll say, yeah, but you don't have any receipts, you don't have any proof of this spending. We think you are trying to defraud us. And it's at that point that you will get fined and you will have to pay the tax that you should have paid. And their powers to reprimand you are endless. Yes, if you're small fry actors, if you've just been a jobbing actor, your income is generally on the lower end. the likelihood of you being investigated is very low. That's absolutely right. And you might think, I'm going to take a risk. I'm going to try and push through an extra £2,000-3,000 worth of expenses every year because I want to save a bit of tax. And you might get away with it for the rest of your life. Like that's the truth. But is it honestly worth it? Is it honestly worth it for a couple of £100 each year to, risk much, much worse kind of
To risk
reprimanding
the earth just
behaviour?
burning around you. It's just
So, I will actually answer your question rather than go off on a tangent. You, as the business owner, are legally required to keep your business records for up to 6 years. That means HMRC can investigate you up to 6 years into the past. What are your business records? Well, they are your bank statements, your invoices, your receipts, tour schedules if you've been on tour, mileage logs if you've used your car for business. You need to keep those documents for 6 years. Once upon a time, that was a nice big juicy folder and a Sainsbury's bag full of your receipts.
Mm.
There are better ways. I personally use Dropbox. One, because I use it for all my businesses and my business documents, but it's backed up, it's in the cloud. I can save all my receipts and my bank statements into Dropbox, and I know it just sits there on the cloud. It's done. I don't have boxes cluttering up my house because I have 3 businesses. My wife is also self-employed. We would have 24 big files if we kept everything in paper copy, and I really don't want to do that. I don't want 24 boxes in my house full of tax stuff. So keep it on Dropbox. Print out your bank statements in PDF or CSV files. Save them into Dropbox. Save your invoices into Dropbox, etc. With regards to paper receipts, you have a few options. You can use your camera on your phone, photograph the receipt, save it to Dropbox. Have a little folder that says physical receipts 2020, 2021, and literally just photo it, save it, photo it, save it. That's what I do. Well, that's what I did until the 6th of April. We at Tax for Actors have launched a receipt saving app for iPhone and Android. It allows you to log your expenses, and it takes a photo of the receipt and stores it on your phone. And at the end of the year, you can produce a PDF document which has the detail of the expense and a little photo of the receipt, which is great, which is perfect. And that's all you need. Then you just save it to the cloud. So
amazing.
There are other apps on the market. There's a company called Receipt Bank, and all the accounting packages, things like QuickBooks and Xero and Sage, have their own apps, but they are very expensive.
Yes, I looked at QuickBooks and I was like, oh, okay, so I'd be paying the taxes that I will probably be paying on my self-assessment to keep a log of how I'm going to pay those taxes.
Yeah.
No.
So we've only just started the app. We've offered it for free to all of our existing clients this year and any new clients that join us. So that's for free. And then from then on, it's £3 a month as of next year. So we hope it's going to help our clients, because a lot of for them, having to post an envelope of receipts to the office, one, is an absolute ball ache, but also you've got to send it recorded or special delivery. That's £5, £6 already. And whilst we've never had any issues with post going missing, you just never know, do you?
No.
So we've launched the app to try and reduce kind of the burden for our clients. I would say saving it into the cloud is the best thing to do, rather than having a box under your bed, especially when you're on tour. Oh, how many times have I left a digs receipt or my travel receipts under Mrs. Miggins's bed in Hull, and then I'm travelling down back home on a Sunday morning and gone, I've left all my receipts under that old lady's bed.
Mrs. Miggins has got you.
What waste.
Yeah.
So an app to take photos, or just photo it and Dropbox it. My other piece, you mentioned QuickBooks. Look, this comes up all the time, and they have brilliant branding. They advertise well. They make it look so simple. At the end of the day, for the majority of sole trader actors, you are not going to get the full functionality out of an accounting program like QuickBooks or Sage or Xero. Feel free to use it, but to be honest, you're going to be paying 10, 15, £20 a month for a package that is not geared towards your business, and you're not using the functionality. It's really geared towards limited companies. And that's my bugbear with QuickBooks. They advertise like, use it as a self-assessment, for sole traders. It's perfect for sole traders. It's not. It's built by an American company called Intuit, and it is the most clunky platform you can imagine. And really, you're paying for something that you're not getting benefit from. So there's my moan.
Absolutely.
If you're gonna go down the route of something that will help you with your accounts, there are plenty of free invoicing apps that you can send invoices from your phone. And like I said, there are apps out there that can help you with receipts. You would be in the minority as an actor if something like QuickBooks was going to help you in your business, for sure.
Yeah, absolutely. And one more question on expenses. What
Yeah.
kind of percentages are you looking at that you can claim back on for sort of the most claimed expenses, or just in general? How do you work out your percentages that you can claim back on expenses? Because there's all the classic ones of, auditions and everything surrounding auditions, workshops, so additional training, headshots, show reels, and then also, theatre trips and Netflixes and all that type of thing. How do you work out the percentages?
Okay, so firstly, you have to ask yourself, is the expenditure wholly and exclusively for business? Um, and if the answer is no, then it's not allowable. So we talk about, let's say, headshots. Let's take an easy example. Headshots. You spend £150 for your new headshots. Is it wholly and exclusively for your business? Well, the motivation, yes, you were motivated to get headshots for your business. So great. But who benefits from your headshot? Well, do you get any personal benefit from a headshot? Not really, other than sending a copy to your mum or your dad to put up on their wall at home so they can
Mm.
say, look at our wonderful son, the actor.
Or grab
Uh,
some Instagram likes is
oh
normally
yeah,
the
or
typical
grab some
one.
Instagram likes. But even grabbing Instagram likes is promoting your personal brand.
Very true.
So the benefit of a headshot, 99% is business. So it's an allowable expense. Therefore, it's 100%. You should not be claiming a percentage of your headshot. Same with Spotlight membership, same with equity membership. None of these things give you personal benefit. What were your other examples? Sorry. So let's take a phone, because this is always the one that people want to know their percentages for. Well, your phone, is it wholly and exclusively for business? Well, you have a phone for business. There is motivation to own a mobile phone contract for business. But you do also get personal benefit. You phone your mum, you phone your friends, you arrange uh, Sunday drinks via your phone, you doom scroll through Instagram and Twitter.
Oh yeah.
So your phone is mixed. But here's where you can kind of get around that. When you're phoning your agent, during that particular phone call, are you getting any personal benefit? No. I mean, you might be really chummy with your agent, but generally, your call to your agent is purely for business. Your call to your parents at the weekend is purely personal. The thing with a phone is you can quantify and separate your personal and your business usage. When you use your phone for business, you're using it for business. When you use it for personal, you're using it for personal. And it's in that kind of example that you can use percentages. So 50% of the time I use my phone for business, 50% I use it for personal. Or if you're a very, very busy, important person, you might say, well, I'm always on my phone talking to my agent, booking castings, etc. I'm going to
We
claim,
wish.
yeah, exactly. I'm going to claim 75% of my mobile phone for business and 25% for personal. For those particularly bougie people, you might also have a personal phone.
Ooh,
Therefore, you could prove that you use your business phone and business contract 100% for business because all your personal stuff goes through your personal phone. So
yeah.
does that make sense? You're able to quantify the usage. 20 minutes on the phone to my agent, 20 minutes on the phone to my mum that month is 50%.
Yeah. Well, it's
That can work.
similarly, as you say, for like petrol, isn't it? So keeping track of the mileages that you actually do. Because I remember when I did a tour, we would specifically write down each postcode to each postcode, the distance, and then the petrol bought and stuff like that. So you can, as you say, concretely prove that this petrol was for this or this phone call was for this, rather than it's prepping for those questions, isn't it? If you ever got them.
Absolutely. And of course, yeah, a car is a great example of that. You probably have business use and personal use. But when you're using it for business, you're only using it for business. And yes, you're absolutely right. Mileage log, write down your miles, write down the postcodes of venues, write down the postcodes of your digs, your home address, make a mark of all the journeys you've made. So the kind of grey area in between is where the confusion happens generally. And that relates to things like clothes and gym membership. Um, Clothes is a complicated matter, so I'm not going to talk about it now. But let's take your gym membership. An actor would argue that they have to keep in shape for their castability.
Mm.
So the motivation behind having a gym membership is keeping in shape for your business. However, Joe Bloggs, who's not an actor, also goes to the gym because they are trying to maintain general health. By going to the gym, an actor also gets general health benefits, and that benefits him personally. So, whilst he does get a business benefit for doing his 10th bench press, that 10th bench press also improves their general health. Therefore, your gym membership is not wholly and exclusively for business. Therefore, basic level, it's not allowable as a business expense because you can't separate the business and personal like you can on a phone.
Yeah,
You can't go, well, these bench presses are definitely for business and these squats are for my personal use.
they were
Like,
definitely personal. Yeah,
yeah, you get the personal and business benefit at the same time. You can't
of course.
separate them. Now, look, in practice, if you were a client of ours and you came to me with your gym membership, there are ways of getting around these questions that we could justify claiming part of your gym membership. Um, so, yeah, I'll leave it at that. There are ways of getting around it. And I'll leave that with your wonderful listeners to think about ways that they could get around the wholly and exclusively question. But on the
Yes.
face of it, gym membership is not allowable for business.
Interesting stuff. Well, I'd love to do a bit more on any do's and don'ts that you have on your self-assessment, because I kind of asked about, doing your first self-assessment, but those do's and don'ts apply to all self-assessments, of course. It's just you're more likely to possibly make those mistakes in your first one. Are there any additional do's and don'ts that you can think of off the top of your head? It's absolutely fine if there's not, because one thing I'd like to just quickly touch on as well is why it's vital to get your self-assessment done correctly and on time, because I think some people really do have a slightly blasé attitude towards taxes. I know we touched on it a little bit, but I'd love you to be able to hammer home that point if that is how
Yeah,
you choose to treat that.
I guess my advice, having dealt with a lot of actors, is be proactive rather than reactive. When you graduate, or even before you graduate, set yourself up with good routines and a good mindset with regards to your taxes and self-assessment. And that boils down to treating your performance as a business. Yes, as theatricals, and I count myself in that camp because I am a theatrical person and I deal with actors every day, and I was an actor, so I count myself within that. We often define ourselves and our identity by what we do as a career. And that's absolutely natural because being a performer is a specialist career, and it takes a certain type of person. So being a performer is intrinsic to your personal identity. And I think that is where sometimes there is a difficulty of separating your performance from you as the person. You need to get into a mindset of treating it as a business. You know, how many actors have sat down and written a business plan? How many actors have sat down and done a cost analysis of their business for the year? You know, you might have spent £2,500 on screen acting classes 1 year, and have you assessed or made any inroads into how much screen work has that led to? You've invested £2,500. Have you got any screen work? Has
Yeah.
that gamble paid off? How much have you earned in your West End contract this year? Did you earn more while you were on tour? Were you able to save more money? Do you know what I mean? These questions might not be important to you, but it's about getting into the mindset that you own a business. You are a business owner. Yes, you're selling yourself, but it's a business. And I think that then translates into a better relationship with your accounts and your taxes. If you get into a mindset that this is a business and you need to treat it as such, you then will probably look at your finances and your taxes in a slightly different light, which means you might keep a more regular tabs on money coming in and money going out, which means you might decide to put together a nice little spreadsheet and say, right, this month I've made £2,000, but I had quite an expensive month. I used a lot of that money to invest in this course. I have these singing lessons. I traveled a lot because I had a lot of auditions. Has that audition paid off? Should I be doing that? You know, those sorts of questions. So when I say, how can you, the do's and don'ts when it comes to your self assessment, be prepared that you're going to have to do it. You know, one of the biggest problems we have with clients, through no fault of their own, is when they change banks. You know,
Mm.
if you close your bank account halfway through the tax year, you suddenly lose access to all that information. When you come to do your self assessment, let's say 12 months later, you're like, oh shit, I haven't got any information from my previous bank. I've only got 6 months worth of bank statements. Well, if you're going to try and justify lots of expenditure, trust me, you're going to need your bank statements as part of your business records. So if you switch bank, make sure you get breakdowns of your spending, get your statements downloaded and saved somewhere nice, because you're not going to be able to access them. And that's
Yeah.
just about being forward thinking. Make sure you've got all your documents in one place. There's nothing worse than having to start your taxes on a Sunday afternoon and go, I don't know where any of this information is. And you spend half of your time scrabbling around emails trying to find an invoice that you sent 18 months ago, or a payslip that you got from Sainsbury's, you know, when you did 2 shifts there at the start of pandemic. It's about just being a bit more on the front foot with it, because when you come to do your self-assessment, or when you come to hand it over to your accountant, it's going to take you a matter of minutes rather than you waste a whole Sunday diving through emails and requesting information from all these companies.
Absolutely. Which
Uh,
costs money, and time is money, and time is money, and all that type of stuff. That's just
Time is money.
yeah.
Absolutely.
Yeah.
So that, I guess that's my dues. My dues is be proactive from the minute you graduate. I know there's going to be people listening to this that aren't graduates, but as soon as you can, get on top of it, get in front of it rather than constantly chasing it. It's
Yeah.
good for your mental health. If you have control of a situation, your mental health is improved.
Absolutely. And I think some people make the mistake where you were speaking a minute or so ago about asking yourself those questions. Okay, I spent this much on acting for screen classes. Have I got any screen work? And a lot of the time that this industry is absolutely not a meritocracy. There's no guarantee that if you spend 3 grand on screen classes, I'm afraid Nina Gould might still not see you for the
Yeah,
new series of The Crown. Like it's, or whatever. It might just not happen. And that's through no fault of your own. And I think those are understandably awkward questions that performers and creatives don't like asking yourself, because it's seen as a failure if you didn't get the screen work from the screen acting classes, which is absolutely not the case. You've got to separate the emotion from the financial there, I think, and just, for your business brain, as you say, treat yourself like a business, take the emotion out of it in that regard. It's not going to serve you in any way, shape, or form, unless, you did get that call from those screen acting classes, and then you can go, hell yes, that was brilliant. But on the whole, the numbers are going to be against you. So I think, I'm not sure if you'd agree with that, but taking the emotion out of those sort of questions will help you a lot.
I think you hit the nail on the head, and we talked about that the 3% succeed in any year group at any drama school.
Yeah.
Um, a lot of this industry and the conversation around it is that if you find yourself in the 5%, great. But let's be absolutely brutally honest with ourselves. This industry is not it's not going to make you financially rich, unless you are the almost 0.2%
Mm.
that get public profile. That I guess that is always the thing that people drive towards often. We go into this industry through a passion for what we do. So yes, you can look at it without any emotion, just look at the finances as a business. And I guess I would encourage that, because that's how my mind works, and probably why I'm not a performer anymore. But you can't negate the um, the passion for your industry in that decision making process. You just need to know where your limits are. If you're happy to chuck £25,000 at continual training for 10 years, every workshop under the sun, and you haven't booked anything, but you personally, that sits okay with you, and you've made that decision, great. You go ahead and absolutely do that. But until you start asking yourselves those questions, you're sort of ignoring
You're
that
skating
process.
past it, aren't you?
Because some
Yeah.
people aren't. If I'd spent £3,000 off on screen workshops and I still hadn't been called in, or maybe I've been called in once and I didn't get any feedback or a recall, I would, me personally, would be like, oh well, that was for me a waste of money, because my passions and my motivations and drivers within the industry are different to the next person. And I think no one's right or wrong, but that doesn't mean you can't have financial or business planning conversations in your head, for sure.
Absolutely. And I think also the classic thing of when you're, you know, sort of getting on the end of your point there, that when you're not getting work, the first thing that normally you do when you ask your agent, you're like, or you have that conversation with your agent of, oh yeah, I'm not getting called in that much. Okay, what it's either you flip a coin. It's either going to be get another show reel scene or get some new headshots is generally the vibe. And then that's another 350 quid. And then if you don't get called in straight away, it sucks. But as you say, that's it's part and parcel of what it is. That's just you're playing the numbers game and it's against you. But we love chasing the dragon. We've all got those dreams, and I think keep on going. Um, is there a best time to do your self assessment? Because I know I imagine the answer was something along the lines of on time, and then it's fine. But are there any sort of times of the year that are better than the classic Christmas holiday January rush when you're eating a roast potato with one hand and doing your receipts with the other?
Yeah. So obviously the tax year for most people runs from April to April. So the 6th of April to the following year, 5th of April. So you technically can submit your tax return at its earliest on the 6th of April each year. You at the end of the 5th of April, you have the information you need to compile your self-assessment. So my advice is, my answer to that is, the best day to file your self-assessment is the 6th of April. If you've been keeping on top of your documents, and from what we've just been talking about, if you've got everything nicely stored away in folders, or you've got a spreadsheet and you've got everything ready to go, what is stopping you sending it on the 6th of April? Just get it done, because there's nothing worse than leaving it. Obviously, you have from the 6th of April all the way through to the following 31st of January to submit it. If you submit it on the 31st of January, you're still technically on time. So the motivation for sending it early is this. One, gets it out the way. It is not that thing on your to-do list that niggles away every single day. So you're improving your mental health. Two, if your tax bill is bigger than expected, if there's an unexpected surprise, you then have longer to save that little bit of extra money to pay your tax bill. Just to clarify, you have to pay your tax bill by the 31st of January. So if you submit on the 6th of April, you've got 9 months until you actually have to pay it.
Yeah.
Whereas if you submit it on the morning of the 31st, you've then got about 12 hours to find that money.
Which is a Hollywood film, isn't it?
Yeah, exactly. I mean, it's great if you've saved money for your tax, and I can talk about that side in a minute, but a lot of us don't. A lot of us, will have a bit of money in a savings account for tax, but generally we've spent a little bit, certainly in pandemic. So why not get it done early, know what you're dealing with, and you've got 9 months to find that money. It's about taking control. And again, it's a mindset. And the last 3 years, I have filed my tax return on the morning of the 6th of April, which I never used to do. Absolutely. Full disclosure, I'm talking from a place of non-criticism, because I used to file it in January as well. But for the last 3 years, I've filed it on the morning of the 6th of April. And I'm really, really glad I did, because 3 years ago, my earnings were higher than they had been in the past. And I had saved money for tax, and I had forgotten that I had a student loan. Or at least I didn't even factor it in. And in previous years, I hadn't earned enough to pay student loan. 3 years ago, I did. And my tax bill was double what I expected it to be.
Oh.
But at least I had 9 months to find that extra money. And now I just do it as soon as possible. And then it's out of the way.
Absolutely. I'd love to follow that up by quickly asking, we'll definitely do savings next, but I'd love to quickly ask, some people, for whatever reason, find themselves unable to pay their tax bill. And that's a much more scary prospect if you do your assessment in January than it is in April. If they find themselves unable to pay their tax bill, what do they have to do? Apart from, the smart answer of, well, find the money. But do you know, what practical steps can they take?
Yeah, I mean, we're in a funny time. Coronavirus has obviously affected everybody's personal finances quite considerably. You have an option called time to pay. So essentially, you can pay by installments. You can approach HMRC. You can do it online. You can apply for it. If you can't pay your tax bill, you can make an application to pay that bill in installments. You're likely to incur some interest, for undue amounts, but it will stop you getting late payment penalties. And that's really the only option you've got, and if you fail on that payment plan, they're probably going to demand the full amount. And then the only other options are take a loan, take a credit card, or bankruptcy. You
Yeah.
know, not paying your tax is really serious. Um, it's not something you can just ignore. I have friends, family, people who, for one reason or another, again, no judgment whatsoever, weren't able to pay their tax bill, ignored the situation, and after a while, they had to go bankrupt. And that's not pretty. That's 5 years of kind of your life being financially restricted. No
Yeah.
debit cards, no loans, no overdrafts, no phone contract, no rental contract. Uh, you literally get a cash card, and all you can do is draw out cash. You can't take any credit agreements. Imagine not being able to have a phone as a business owner. Which we are. What do you do if you run out of credit and you're in somewhere where you can't get cash to then go and top up? And your agent's calling you saying you need to get to London in the next 3 hours because they want to see you for a final casting of The Crown, and you're the actor that has a pay as you go phone and you can't top it up and you're out of credit. Like, it impacts your life. So it is serious. Is there much you can do? No. Go to mum and dad, go to family,
Yeah.
get it paid is my advice.
Totally. And then to quickly touch on savings, I'm aware I don't want to take too much more of your time up, but the whole sort of tried and tested mantra of putting aside 20% of your earnings, is that a reasonably wise one, or is it more or less entirely dependent as you go on your earnings day to day, knowing that this industry will fluctuate hugely?
Uh, okay, people say 20% of your earnings on the basis that the basic rate of tax is 20%, right? So any money that you earn over 12,500, which is your personal tax-free allowance, anything you earn over that is taxed at 20%. So people use that we'll put aside 20%, you'll be fine. I think it's worth remembering that as a self-employed individual, you also have to pay national insurance as part of your tax return. Because if you worked in PAYE, tax and national insurance gets deducted automatically. As a self-employed individual, you have to pay your tax and national insurance at the end of the year as part of your self-assessment. National insurance is charged at 9%. So any money that you're earning over those, thresholds, it's not being taxed, inverted commas, at 20%. It's actually being taxed at 29%. People forget that you're going to have to pay national insurance as well.
Mm.
So is 20% going to cover your tax bill? Probably, because you've got expenses to put through. You do have a tax-free allowance. So yeah, 20% is going to be okay, probably. But there isn't really a right or wrong answer on this. My general advice to most clients is save as much as you can, because at the end of the year, if you've saved too much, thank you very much, take it out of my savings account, buy myself a new wardrobe, go on holiday,
Yeah.
rather than not save enough, be scrabbling around for 9 months desperately trying to find this extra £1,000.
But at least you got a tan.
But at least you got a tan. My view is 25%, really.
Yeah.
And I know that's horrible. Like, people are like, I'm never going to save 25%. But in most cases, if you save 25%, you're probably going to be okay. You put 20% away, there is a kind of chance that you will be on the cusp that you've not saved enough. Especially, and we won't have time to talk about this, but for all of you actors out there, if you've listened this far, go and research payments on account, which is never talked about at college. No one ever truly understands what this means. Go and search HMRC, payments on account. As self-employed individuals, you're often required to pay for your tax bill for the year just gone, but also to pay for the tax bill that's about to come. So you're paying tax in advance. And that's when having 20% in your savings account is not going to cover your tax bill.
Yeah.
So
Oh,
go and check
blimey.
that out.
Yeah.
HMRC, payment account, go and understand what that means.
Look
Or
it up.
come and chat to us at Tax Fractors and we'll explain it further. But it's
Absolutely. Well,
running out
that's
of
sort
time.
of how I'd like to round things up, really, by well done everyone that's got to the past hour mark with us talking about taxes. But I think it is so immensely useful to understand, not just to be able to do your self-assessment yourself, but to sometimes understand that it's better to let someone else do it for you, which is exactly what Owen and the team at Tax Fractors do. And I'd love to just give you a minute or two, Owen, to talk about why actors should come to you guys and pay for your service rather than doing their own self-assessment. And on the end of that, how can they acquire your services? How do people get in contact with you and your team?
Okay, so again, full disclosure, as a self-employed actor, you are well within your rights and you have the capability to submit your tax return yourself. Absolutely. That's why it's called a self-assessment. However, if you are not numbers minded, or you don't have the inclination to go and delve into employment manuals on the HMRC website, then there is a chance that you might not want to do it yourself, and you may want somebody such as me and my team, or the other entertainment accountants out there. You may want someone to assist you with that, just so that you have peace of mind that it's done properly and within the letter of the law. Um, let's talk about time, and we talked about time is money. Well, for you to do your own self-assessment, if you're not, number savvy and you're spending all this time researching every little bit, it might take you 6 to 8 hours. It might take a full day for you to do it. Let's say your hourly rate is £25. Let's say if you were not doing your tax return, you could go and teach for Stagecoach for £25 an hour on that Sunday. Well, by not teaching, you've lost out on £150 worth of work. So you could spend that £150 and get Tax Fractors to do your self-assessment for you, and you've not had to bother sitting and wasting a whole Sunday. Does that make sense?
Absolutely.
And then the final thing is, I always think having an accountant is great as part of your support network as an actor. Being an actor is tough. Like, the industry is tough. You are constantly fighting and grafting. You need all the help you can get. And I think having an accountant on side to be able to fire questions at, to help you even during, contract negotiations, is worth its fee in itself, to be honest. And if you do reach the heady heights of The Crown or another high-paying Netflix series, an accountant being part of your support network and being part of your career and your journey is probably going to save you tax in the long run. There are ways of being more tax efficient when you become a higher earner. Let's say you get into EastEnders or Hollyoaks or Coronation Street, or you get Netflix things coming at you. Having an accountant there to advise is really super important, because no one wants to pay more tax than they have to. Added to that, mortgage applications, navigating that side of things when you get to that point in your career when you think, right, I want to buy a house. Having an accountant on side to be able to offer advice and guidance, I think, pays for itself. It's a small fee, and during these difficult times, spending any more money on your business is probably not something you really want to do. But I would feel that our clients would all, speak up and say, actually, the money we pay, we get back in advice and support and help. I mean, the amount of phone calls we've had during the pandemic regarding the self-employment grants, I reckon we've spoken to almost every single client for at least 30 minutes, just explaining eligibility, and how best to go about managing that. We release videos to our clients to explain changes. Yeah, that's yes. you could do your tax return yourself, but I think having an accountant on side, whether it's us or somebody else, is more than that. It's more than just doing your tax return. It's being a sounding board. And you can find us, tagline, at taxforactors.com. That's our website. Tells you about me, tells you about our team, who are all, funnily enough, ex or current performing professionals. We are unique in that respect. Or you can drop me an email, hello@taxforactors.com. That comes through to me. And you can also WhatsApp us, and you can find our WhatsApp details on our website.
Absolutely. And Tax Factors is also on Twitter and Instagram under the same handle, and there's always useful information being put out on those as well. And even though we've been talking now for nearly an hour, 10 minutes, we've barely scratched the surface, as you said a couple of times, in regards to certain subjects on all the financial do's and don'ts and ins and outs of this crazy word called taxes. So thank you so much for spending some time with me this morning, Owen, and going over this real industry essential. And I agree that if there's any additional questions or things, do consider Tax for Actors. So thank you so much, Owen. Have a wonderful rest of your day.
Amazing. Thanks so much, Matt. Have a good one.
Thank you for taking the time to listen to our podcast.
We hope you enjoyed it and learned something.
We look forward to having you back in the room very, very soon.